Good morning, everybody. This is Patrick MontesDeOca with the VCPMI early morning update for December 21st, 2020. Let's jump right into the TikTok live trading room here and take a look at the gold market. Trading last at 1885, down about 320. We have a kind of a mixed picture this morning with metals kind of unchanged to slightly higher to lower. We seem to be jumping around this area here after making a high last night of 1912. And we reverted back down and trading last at 1886. We seem to have experienced a little bit of profit taken up there, a little bit of supply. The silver market is showing more strength than the gold market here. We're up 37 cents at 26.40. Up 1.45%, roughly around that area. The E-mini S&P is trading last at 36.60. We've experienced a bit of a sell-off here that brought the market down all the way down into this 36 level that it appears that it has found support. And we're looking at GBTC continues to challenge the highs here, making a new high here this morning. But it seems to be moving into the area of distribution of supply. So this is pretty much where the GBTC is recommending to take profits or to begin to be cautious up here if you're on the long side of the market. The SPY is also experiencing a sell-off here, down about 557, down about 151. And so we have the stock market softer. The metals markets consolidating the gains up here with a high of 1912. And the silver market is the one that is showing, once again, tremendous resilience. As opposed to the gold. But it has entered, I want to point out to you here, the silver market has entered into an area of distribution of supply. So if you're coming in long, or you're net long, this is a good area to be unloading some of the profits here. I'm looking for opportunities here today, to enter into some kind of a day trade. But if we take a look at the weekly numbers here, we are trading above the buy one level of 1881. and we completed the target basically of 1891. 1888 was the mean, and the market sell off at about 2 a.m. and made a low of 1859. And it was way below the daily B2 level expected at 1874. So when the market came down below this level here early at 2:30 a.m., it began to activate by triggers, as you can see, from the B2 level. And it completed the target right above it, 1881, and the mean target of 1888, which is where it's trading right now. Now this signal has completed the target, and it has gone neutral from the previous signal here early this morning. And in fact, it has activated a bearish trend momentum because now it's trading underneath the average price. So the daily, unless it closes above 1888, it would reactivate the uptrend with a target of 1894. Otherwise, the 1881 level to 1874 level are active at this point. The weekly numbers that we have, basically, the average for this coming week is 1870. And the market coming down earlier below the average daily and also the daily by 1 and by 2 levels and reverting right back up above it was a pretty strong signal. It validated that the buyers are willing to step up, you know, at this level here with the law of 1859. And if you see right below it, we have the monthly number of 1848, which is the monthly number. The AI interprets this signal as the market identifying not only the weekly uptrend, we are in a monthly uptrend. The weekly was tested, validated, as well as the daily signals were validated. And now that the market is trading above it, it is essentially putting into place the weekly targets of 1919 on the weekly signal. On the monthly signal, we're taking a look at a much higher number. Let me take a look at the monthly chart here. $19.13 is the monthly sell one level that we've been working with for this whole month. And obviously you can see the high today was 19.12, and it came right into this level that identifies the beginning of supply, the beginning of distribution of supply. And the market met the target 1912, which in In theory, it satisfies the criteria of the algorithm. And for all intents and purposes, to close below, the next bar identify the short trigger. And the monthly now seems to have completed this bullish pattern that we've been in and reverted back down to activate a bearish signal, a bearish trigger point. I always tell my traders, once again, that you always want to leave room for error and a margin for error. You know, this is not a perfect science. It's not 100% guaranteed. So when you're making 99.9% of your profits, you want to be an intelligent trader and either trail the position with a stop, a trailing stop, which is the only time that I recommend my traders to use a stop. Otherwise, you use the specific close stop. And then you can measure, depending upon on how aggressive or how conservative you are, how you manage those stops. So coming back to the market here, it looks like the monthly completed its pattern unless it closes above 1913. It's in a bearish mode. A close above 1913 activates 2045. The question that I'm asking myself as a trader is the 1912 the high that we're going to see here, or the disc completed pretty much this swing target. So let me address the daily chart. What you see here is that after the market made a high on November 9th, the market came right into this Fibonacci trend lines that you see here, and also right into completing a monthly target, 23.6% Fibonacci retracement, and it went right into the monthly pattern that never really had the buying power to take all of the supply that was being offered up here. And I believe this was the day that we got the first time that we got the positive news about the vaccine. The potential of the vaccine being successful. So it was a good reason for the market to retrieve or revert, take profits. When it came down below the monthly 1913, it activated a bearish trigger, and automatically it activates the target below. And in this case, the monthly target of 1840 was completed. Now, and below that target on the monthly, closing below the monthly activates a bearish monthly pattern with a 1707 number comes into place. Now, for me to take a look at, the relationship of all the trends, I use in this case, like the annual number, the annual average right below the 1840 is the 1810. And when the market came down, below 1810, it activated the annual pattern. Way below 1532. The algorithm, when the criteria is met and activated, it defines for you within the time frame that you're trading a specific structure. And what I'm doing here is I'm taking a look at all of the trends, basically, the waves, the patterns. That's what we're talking about. In the VCPMI is an algorithm that creates a mathematical structure within that trend, within that pattern. So when one pattern is violated, the price falls into another pattern, which is the bigger pattern or the smaller pattern, So I take a look at all of the patterns as they relate to each other harmonically between the daily, the weekly, and the monthly, the annual, and also the 9-year cycle that we use, which is the long-term cycle. That the average price that we have is 1675 if you look at the right side of the chart. With the market coming down below the 1810, even though these numbers were activated, it doesn't mean that the market has to come down, but they do come into focus. They do come into place, just like a GPS, for example. But the action of the market, and the market only will validate what it wants to do. And in this case, it came down, activated the signal, but it negated the signals, these bearish signals, when the market closed above 1840 on December the 3rd. On December the 1st, it activated an annual bullish trend momentum. It negated this previous negative trend that you see here, monthly, annually. When it goes back up above, it negates that previous bearish trend. And so we've activated now a monthly bullish trend momentum, an annual trend momentum, bullish trend momentum, unless we close below 1840. We are in a bullish trend momentum monthly and annually. Closing below 1810 would negate the annual bullish trend momentum. So the fact that the market now is above the monthly and the annual trend momentum, it activates the levels above, which are the 1913 to 2045. And the Annual is all the way up to 2164. The market rallied today to a high of 1912, not quite reaching this monthly target of 1913. The interesting relationship here that I'm taking a look at is the fact that this code level here of 1913 has entered into a Fibonacci resistance level, trend line resistance levels. And we've tested it so far, but we have failed. Okay, we are in the process of testing it, but we're beginning to see supply. So unless we close above 1913, we are in a bearish trigger. Now, on a monthly, from a high of 1912, it came down to a low of 1859, which is, I just find this phenomenal volatility in one session. When I'm used to waiting for the gold market to move $1, $2 weeks, this gives you the magnitude of the volatility in the market, and you need to make some adjustments accordingly, which is why one of the reasons why I trade in the futures day trading, but I build aggressively in stocks or ETFs or derivatives. Let's take a look at the silver market here. And we see the silver also tremendous volatility here, a range of high at 27.63 with a low at 25.12. This is one trading session. And sure enough, of course, the target you can see meeting both sides of the trends daily, the daily and the weekly as well. Telling you to take your profits at 26.98 on the weekly. The stock market has entered into what looks to be a year-end profit taking. It's down 73 points, and it's entering into an area that is an area of support. It's into a weekly area of support. It has activated a weekly trade alert, excuse me. And unless it closes below 36.05, it could be that the market is offering some kind of support at this level. So we'll take a look at the market a little later on here for this. The derivatives and the gold market, like nugget, seem to be on the plus side, but it's a fairly quiet market this morning. It's kind of feeling like a holiday market, moving into a holiday period. I published in the Associated Press on the 18th an article that was entitled, "Will Bitcoin Be a Currency?" And we took a look at the gold market and the Bitcoin market. And the summary of the report basically is that we could look at this situation as a big margin call on the economy and the US dollar. In March, gold transitioned into a currency. It appears that we are going to be looking at a new economic system next year. The question is, will it take? What form will this new system take? Will Bitcoin or gold be a currency? Trading is a very individual process. The more that you let emotions and the chatter in the media influence your trading, the worse you will do. Instead, listen to the market, especially now that the fundamentals have been shattered by this pandemic. The fundamental market collapsed in March. The thing that kept the market alive was the change from the real market to a virtual market. We could look at it as a big margin call on the economy and the US dollar. The US has to come up with a large amount of stimulus as demanded by the market, just like a huge margin call. The US dollar, as the world's reserve currency, has seen a large amount of supply in the form of stimulus come into the market. That supply threatens the purchasing power of the US dollar, since more dollars means a weaker dollar. In March, gold transitioned into a currency. Even though the dollar benefits short-term from this stimulus, such as a safe haven for international traders, in the long term, it will decline against gold. When the US dollar was taken off the gold standard in 1971, it created a fiat currency that led into a new debt economy. Debt in 1971 was a few hundred billion. Now we are at about 27 trillion. The debt to GDP ratio is about 120%, which is unsustainable. The amount is mind-boggling. It raises questions about the integrity of the system and the US dollar with such debt levels. The US, however, as opposed to its creditors, can print as much of its currency as it needs or wants. Our creditors cannot print US dollars. We're going to see defaults on foreign loans, as we did in 1981 with Mexico. Ecuador is generating an interest to eliminate the US dollar and make it illegal to use, just like Venezuela. The only alternative Mexico had was to devalue the peso against the dollar. When the Mexican economy entered a long period of inflation and the peso went from 16 to 46 almost overnight against the dollar, by devaluing the peso, it devalued the debt in that currency. But it led to massive inflation. The US will face a similar situation at some point in the future. Financial assets will then collapse. Russia, China, and third world countries that are in debt in US dollars are beginning to see a credit crunch as demand for US dollars increases. in response, the U.S. is printing more and more dollars to meet that demand. The U.S. also had to print money to maintain confidence in the system. The government also had to keep interest rates at almost zero. In Europe, interest rates are negative. If you take inflation into account, if or when interest rates rise, then the defaults on this massive global debt are going to be coming. The U.S. is talking about another $1 trillion injected into the system. And the market, however, is screaming for more money. The demands for more stimulus will only increase next year. New lockdowns will only make those demands even more strident. With massive printing of money, it will reflect. It will artificially inflate stocks, real estate, and other assets valued in US dollars. But at some point, the dollar will collapse. All of these factors are good for gold because gold, unlike the dollar, has intrinsic value. It appears that we're going to be looking at a new economic system next year. The question is what form that new system will take. Would Bitcoin be a currency? Bitcoin Grayscale Investment Trust is trading now at a high of 31.15, trading last 30.30. It is a breakout, and the breakout is a reflection of the uncertainty about the US dollar and the mistrust of fiat currencies. Bitcoin has more than $600 billion invested in it. Investors are looking for alternatives to the US dollar. We trade the Grayscale Bitcoin Trust, which is registered on the exchange as opposed to trading Bitcoin in the non-regulated market. With GBTC, you can trade Bitcoin, but be somewhat safer. Our Bitcoin investment is up 6 times since March, and we view it as an investment or virtual asset. It's not a currency. You can't borrow against Bitcoin, unlike or other currencies. Yet. You can see here the price back in March was $5. We saw a high of 31 as of this morning. That's more than a 61 return in the since March of last year. It's been a phenomenal rise, and the question that we're looking at here is, are we looking at some kind of a top in Bitcoin, or are we in a pretty much vertical breakout? We have met the extremes above for the time being, and so it's a question of what the market is going to do here, or whether it's going to move up above this level here. But obviously, once we got through that $20 level and found the support there, we've risen, about from 20 to 30 in a matter of days. That's an amazing, amazing blowout phase. It could be that we're looking at some kind of a major topping here. Let's go back to the gold market here, and it's pretty quiet here in the gold market. In the metals market, seems that all the action and the limelight has been taken by Bitcoin. So we're comfortable where we are here. I'm comfortable where I am. And let's just let the market do what it's got to do here for the time being and watch it for a little bit here. Very quiet day. I think the action basically took place on the Globex overnight. The silver here is activating a trade alert on this bar here. Let's keep an eye on the silver activating a potential trade alert. And if it closes below 26.56, it is a potential short trigger activated on silver. So let's keep an eye on this here. But there are no trades that are, I believe, worth taking at this point. The market is very, very slow, and there's no reason to push any trades at all. And feels, as I said, like a holiday value. It's been an incredible year. And it appears that the stimulus that has been politicized has been approved, I believe, of about $600 per recipient. So you can see that the market kind of yawned at this number, and it's not really reacting in a positive way. And it's probably, basically saying that it really is not enough stimulus to come into the market and make a difference. But at least, and I hope that this is a little bit of relief to those people that are experiencing a difficult time economically right now, emotionally, psychologically, in every other way. I am not sure that at this point the amount of stimulus that they offered right now is anything significant. I think it's a band-aid. It's a political gesture more than anything else. And I think as we come in after the holidays in January, I think we're going to be looking at a far greater amount of stimulus that's going to be a necessity to implement in the market, particularly as we begin to see the damage that this new second lockdown is causing the economy, and it's pretty much globally, it's around the world that governments are locking down during the holiday, causing massive economic chaos, irrelevant of any consequences. And, I frankly feel that they have lost control. And anything that they do at this point or from now on is going to be purely panic, because I believe personally they lost control. So I'm looking at this whole situation as an opportunity for myself. How do I benefit this? How do I coach and teach my trader subscribers? How do I share this intelligence to make a difference? Because the magnitude of what happened here is by far greater than any other time in the history of the world. And at the same time, that is causing a tremendous amount of challenges for a lot of people in many, many different ways. It really is opening up, once again, what I believe is a historic opportunity to change your life. Especially if you're a millennial or if you're young. I think the fact that we're looking at interest rates at zero interest rates is unbelievable, particularly if you have, any inclination that you want to buy a house or you want to invest in real estate and so on and so forth. As you can see, the effect that the interest rate environment is having in the real estate market, in addition to the incredible demand as a consequence of the exodus that we got from people migrating out of big cities and big populations into more smaller towns, so to speak. And so the demographics are changing, and it's a question of, what is the future now? Obviously, because of this transition, particularly as we begin to shift wealth. And I believe what we're looking at right now is the biggest shift in wealth in the history of the world. When you really think about here what just happened to middle class, for example, as a consequence of this pandemic, and when you look at small businesses, people that are independent, that are pretty much self-employed and so on and so forth, and a lot of these small businesses, they're gone. They're gone. The mom and pops, the small restaurants, they're gone. And we're facing this incredible, huge gap that, as a consequence of the pandemic, it has pushed basically the lower middle class into poverty. Incredible shifts in the structure of the economic system. And we have yet to see, as we come into 2021, basically, what this new reset is going to look like. I think the one that I believe is pretty clear, which is why I believe that the metals markets should be looked at not only as a speculative investment, but a way to protect your assets and use any correction to systematically go in and buy the market. And depending upon your profile, I think that at least 1/3 of your net worth should be invested in the gold market, in the gold sector, and depending upon your profile, divided into different instruments available. The gold market offers thousands of opportunities, not only trading in futures, but if you're looking at it as a way for you to hedge your net worth, or for you to look at it as a protective risk asset, a safe haven asset outside of the US dollar, and certainly at zero interest rates, the bond market. That's the last place that you want to have your money, is in bonds. And any cash that you have, that you keep, obviously should be into some form of precious metal, into some form of an asset that will maintain the purchasing power, the intrinsic value, as we begin to erode, as we begin to implode more and more the US dollar as the world's reserve currency, as we continue to increase our debt levels. The other side of the coin is the dollar gets weaker. And as the dollar gets weaker, it devalues intrinsically any asset in US dollars. And if you hold debt, obviously in US dollars, if you're a foreign investor, then you're subject to the wrath, basically, of the devaluation behind not only the exchange factor, but the devaluation of that asset as a consequence of the supply that is coming into the market, in the gold market. And once again, I go back to, these markets are basically the essence of the basic law of economics of supply and demand. The more supply you create, unless demand is there, it reflects in a weaker price. And fortunately, the US is the only one that has the power of the printing press. So we are at risk if the US dollar continues to decline, that a lot of this foreign debt could enter into a default. Or I keep referring, back into Mexico, the way that they pretty much decided to default is by devaluing the currency. And as a consequence, devaluing the old debt in that currency. But people that were aware of this became multi-millionaires, literally overnight, just by the exchange factor. If you converted pesos to dollars before. So there are many ways to take advantage of any economic crisis, that is created, in whether it be a political crisis or an economic crisis or a natural unprecedented crisis like we have with the pandemic, that still is very much real and affecting our lives tremendously. And it's going to continue to, I believe, here for the near for the near future, or at least for the next 6 months. The good news, obviously, is that you're hearing a lot of good news about the vaccines and at record levels, and now are being implemented. But there is still a lot of logistical risks in the process of dispensing, you might say, this. And this is still just a very fragile situation all around here. The thing, again, that I am focusing on is on what the market is doing in price, regardless of this chatter that pretty much you hear and you can see it, on the internet. And particularly with this amount of fake news, you might say, you don't know pretty much what to read. I try not to, in all honesty, and I just try to listen to what the price is telling me. The charts tell you a hell of a lot more than what some of these so-called experts want to tell you. The market always knows what it wants to do, and sometimes it will be contrary to what you think, contrary to the fundamentals. And in order for me to keep my emotions in check, I use the VCPMI, which is, once again, a GPS that allows me to be completely, as much as I allow myself to be, emotionless in my trading, robotic in my trading. Very quiet. You can see the price activated now again, a bearish trend momentum on the daily signal, contradicting the bullish weekly signal. And so you're getting a mixed signal, and the best thing to do when this happens is do nothing. Just enjoy the fact that there's no signals to be traded, and enjoy moving into the holiday spirit. And I think it's a great opportunity just to kind of meditate in terms of what's happened here, and where we potentially are going. The VIX has taken off. 31.46 was the high here, so that is a sign that volatility is coming back. It's coming back here into the market, into the stock market. So, and I think it's been long overdue for the market pretty much to continue to make new highs here on the face of this economic gloom that we're facing here, until things begin to pick up into some kind of a new normal paradigm once again. A little more selling coming into the gold market, and this confirms, obviously, now that we are entering a bearish a bearish trend momentum, and the target of 1881 has been activating, 1881 to 1884, and underneath we're looking at the weekly 1870. So it looks like you want to continue to take profits on any rally. It's above 1900 here. Continue to hold our hedge. We have recommended at this point to be hedged, and look for a reversion back down, possibly into that 1820 area, 1810 area, ideally over the next few weeks. Over the next few days. In the meantime, thank you again for the privilege of your time, and I will continue to update you here. And I sincerely hope that every day that you come here, every time you come here, you become a better trader. Please take care of yourself. Be well. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker desktop platform into the hands of its users who are on the go. Ticker Talker connects novice and advanced traders with industry leaders who are